As trading unfolds today on Thursday, July 23, 2026, NUBURU stock is trading live at 7.3 cents per share, experiencing a sharp intraday decline of roughly 39% on massive trading volume exceeding 25 million shares. When retail traders log into their Robinhood app or open up their interactive broker's account to glance at the day's top decliners, the initial impulse is to write off a microcap stock trading in single-digit cents as another penny stock sinking towards zero. The general assumption across online investing communities is that NUBURU is merely trapped in an inescapable cycle of equity dilution, reverse stock splits, and exchange delisting notices. But if you look beneath the surface of the immediate price action, a completely unexpected narrative emerges that contradicts the surface-level panic. The dominant consensus among everyday investors browsing stock message boards and checking their SoFi Invest portfolio is that recent corporate moves represent pure distress. Yet just days ago, NUBURU completed a $38 million public offering priced at approximately 15.5 cents per share, which was a premium of roughly 30% above its prevailing market price at the time. In the world of high-risk self-investing and microcap corporate turnarounds, troubled companies almost never raise capital at a premium to market value. Institutional investors usually demand deep discounts to compensate for risk. The fact that sophisticated family offices and institutional buyers willingly agreed to pay above market rates indicates that insiders and specialized funds see an operational pivot that the broader market has entirely overlooked. To truly grasp what is happening with NUBURU stock today, you have to break down the sheer intensity of its recent price swings and trading mechanics. Over the past 52 weeks, the stock has traded in a wide band between 3 cents and $4.24, illustrating extreme volatility that routinely catches momentum traders off guard. Millions of retail investors using the Robinhood stock trading app and Fidelity mobile app have watched the stock drop sharply as the company issued millions of new common shares and pre-funded warrants. This massive expansion of the share count, which added hundreds of millions of new shares to the float, naturally crushed short-term sentiment and triggered rapid selling pressure. However, trading volume has exploded, frequently topping 20 to 30 million shares in a single trading session, proving that liquidity is heavily active as speculative capital swaps hands with long-term distressed asset buyers. What makes this specific capital injection so critical is where the cash is actually going. Rather than simply funding ongoing operational burn, management utilized the proceeds to extinguish $16.75 million in outstanding debt. For a business with a market capitalization sitting around $12 to $18 million, eliminating debt clears off a massive financial anchor that previously threatened total insolvency. Furthermore, the capital raise was specifically designed to fund the acquisition of a controlling 70% stake in Tecne SPA, an Italian defense and security technology entity. This represents a complete structural pivot away from being solely a niche industrial laser hardware vendor and toward becoming an integrated defense platform focused on electronic warfare, defense mobility, and directed energy applications. At the same time, investors searching for investment help on investment sites cannot ignore the significant listing hurdles facing the company. The NYSE American exchange initiated delisting proceedings after the share price lingered below the mandatory 10-cent threshold, forcing the stock to trade temporarily on over-the-counter channels under the same BURU ticker while management appeals the determination. To regain compliance and appeal to institutional mandates, management has pursued aggressive corporate restructuring, including a planned reverse stock split. while retail investors on SoFi Active Investing or Fidelity brokerage accounts often view reverse splits with extreme suspicion because they reduce share quantity without altering underlying enterprise value. In this specific case, securing a higher share price is an unavoidable prerequisite to restoring exchange compliance and attracting traditional individual brokerage capital. When retail market participants manage their portfolios using Schwab Intelligent Portfolios, Fidelity Wealth Management, or an interactive broker's account, they are taught to avoid balance sheet dilution at all costs. But evaluating microcap tech turnarounds requires weighing immediate dilution against long-term survival and commercial expansion. Investors holding Tesla stock, Apple stock, or NVIDIA stock are accustomed to steady institutional sponsorship, robust free cash flow, and seamless market access. Comparing a hyper-speculative microcap like NUBURU to mega-cap titans like Apple stock or NVIDIA stock might seem unusual, yet the fundamental decision-making process inside a self-directed portfolio remains identical. Whether you are allocating capital into Fidelity mutual funds, Fidelity ETFs, Robinhood crypto, SoFi ETFs, or individual stocks, you are constantly measuring whether current management actions will build real value over a multi-year horizon. Looking into the core foundation of the business, NUBURU built its reputation as a pioneer in high-power, high-brightness industrial blue laser technology. Traditional industrial lasers typically rely on infrared wavelengths, which struggle with highly reflective metals like copper, gold, and aluminum because those materials absorb very little infrared energy. NUBURU's proprietary blue laser systems allow industrial manufacturers to weld and 3D print non-ferrous metals up to 8 times faster with significantly higher precision and minimal defect rates. This technological edge gave the company a strong foothold in electric vehicle battery manufacturing, consumer electronics, and additive manufacturing. However, despite possessing valuable intellectual property, historical revenues remained tiny, with trailing 12-month revenue sitting under $500,000 against EBITDA losses exceeding $24 million. That severe imbalance between research expenses and commercial revenue is precisely what pushed the stock into penny stock territory. The shift toward defense and dual-use security applications comes at a time when global defense budgets are rising rapidly and governments are actively seeking high-tech, non-kinetic directed energy systems. Combining proprietary blue laser optics with Techne's established defense infrastructure creates a dual-use hardware and software ecosystem capable of serving military, government, and critical infrastructure clients. If management can successfully close the acquisition, integrate operations, and secure government defense contracts, the company's revenue profile could look radically different over the next several quarters. In contrast, if regulatory approvals stall or contract monetization takes longer than anticipated, the cash burn could once again pressure the balance sheet and force additional equity offerings. At this point in the analysis, I want to hear directly from you. Comment below how many shares of NUBURU stock you currently hold in your portfolio, or tell me whether you believe taking high-risk positions in microcap defense turnarounds makes sense in today's market environment. To evaluate whether this turnaround attempt can gain lasting traction, traders using Robinhood stock trading, SoFi trading platform, or Interactive Brokers stock trading must keep a close eye on the company's operational execution. Self-investing in hyper-beta microcaps demands a clear understanding of cash burn rates and gross margins. In past quarters, NUBURU suffered from high manufacturing overhead and limited sales volume, which bled cash rapidly and forced reliance on costly debentures. The recent elimination of $16.75 million in debt directly addresses one of the most dangerous vulnerabilities on its balance sheet. Removing debt interest payments gives management additional flexibility to funnel working capital into manufacturing blue laser units and finalizing the integration of Techne's defense operations. Furthermore, understanding institutional sentiment is crucial when analyzing stock momentum. While retail traders using the Robinhood app or SoFi stock trading often trade based on short-term charts, institutional investors focusing on intelligent portfolio management evaluate structural market size. The global defense and security sector represents a multi-billion-dollar market where single procurement contracts can exceed a small company's entire market capitalization. By positioning its blue laser IP as a core component of directed energy defense systems and electronic warfare platforms, NUBURU is attempting to tap into long-term defense spending cycles that are far less sensitive to consumer economic shifts. However, risks remain pronounced for anyone managing capital through an individual brokerage account, Fidelity IRAs, or self-directed investment accounts. Over-the-counter trading typically comes with wider bid-ask spreads and lower overall liquidity compared to major exchanges like NYSE American or NASDAQ.